We've posted the minutes from the Federal Open Market Committee meeting held mid-June. This is kind of a headline that probably is getting most of the attention. Almost all Fed officials opted for June rate pause. A July increase is on the table. I can't help when I see this headline but think, are they really going to do another increase this year? Or are they just trying to instill fear in the markets while we get through this rough patch? To sum up the meeting, I just tweeted this a little bit ago. There's some key points. Mild recession later in the year. This is probably what stuck out most to me. Then moderately paced recovery. That is not the first time they're using this. This is an ongoing theme. These are terms that they've used in 2020. Moderately paced recovery. They're always looking for some type of recovery. Expect slower policy tightening. Most members anticipate at least one rate hike this year, expect a slower pace of increases. Some officials have reservations and suggest pausing rate hikes. So, to put it simply, not really anything new and just everything kind of all over the place in terms of what's going to actually happen next. But I want to show you maybe the more important thing. And maybe they are just trying to instill fear, or maybe they are going to raise rates another time this year. Either way, this is it. We have just watched this thing fall. If you just look at this, we've been tracking this for quite a long time now. We've discussed this. This is Truflation. This is on-chain metrics data, Oracle data. It has really acted as a leading indicator through just the entire inflation data theme that we've been tracking for quite a long time now. And you can just see it has just dropped to just a new low. So it is continuing to fall. And I think this is going to play very heavily depending on what actually comes out in terms of, June data, the CPI data. This is going to play heavily into what the Fed does next, and really what that, those Jerome Powell meetings kind of lead us into, right? So this is the big news though. What's happening here? And imagine when this falls below 2%. I shouldn't say when, but if this falls below 2%, especially in the short term. So that is something to track. But I'm going to continue to just hammer home on this. I've been talking about this for so long, and this is the point. Investors may be surprised to learn that in the last 69 years on average, stocks did worse in the year before recession began than during the recession itself. I know I say it all the time, but we're seeing how this shift is very slowly happening, and we're at the tail end. This is going to pivot to a recovery. And through all of the fear that we've been in, there will be a lot of people, I think, that kind of miss the boat in this sentence because they're captured in so much fear. That is to say, if we just go and we look at a zoomed out Bitcoin chart, the year before the recession, here it is, that's the year before, is usually the worst of it. If we're talking about a light recession sometime in 2023, the year before the worst of it, the year before is 2022. So I just want to keep hammering that home. I want to continue tracking this because just when we get post 2024 halving, for instance, I don't know where we'll be on this Bitcoin chart, but it will be very, very interesting to see how it all played out. And if what we were saying in 2022 about that being the worst of it for 2023 recession, it will be so cool to see if that plays out. In other big news as it relates to crypto, I want to discuss kind of and piggyback off of something I covered in yesterday's video. You saw Paul Graywall, he tweeted that he's a chief legal officer over at Coinbase, basically tweeting that the SEC's interpretation of investment contract violates the law because of the major questions doctrine. I covered this in a video yesterday, but there are a lot of different layers happening right now. You might have seen John Deaton over on Twitter. He tweeted this June 30th. This is a big deal as it relates to this entire topic of the major questions doctrine. This morning on Crypto Town Hall, we were discussing the major questions doctrine and the Coinbase case against the SEC. And he's retweeting this tweet and this big headline that came out on June 30th. Today, the Supreme Court granted cert to a case that will decide the legality of SEC in-house administrative court, showing once again that the court intends to curtail administrative overreach. It's in my thumbnail, what we're about to look at. But this is the headline that tweet was referring to. U.S. Supreme Court to decide legality of SEC in-house enforcement. The U.S. Supreme Court on Friday agreed to hear a bid by President Joe Biden's administration to defend SEC in-house enforcement proceedings in a case that could broadly undercut the power of federal agencies. It's not just in crypto that this fight to the SEC is being taken. And it's not looking great for the SEC. It's really the purpose of this video. There was an amazingly good article that was released today from Cointelegraph. My latest, and this is the author, my latest in Cointelegraph comparing the fight Coinbase is in with the SEC, the founders fight on July 4th, and the major questions doctrine. This is getting deep, everybody, but if you're not into this, if you're not into kind of the really just the inner workings of law and how this will impact our crypto journey, I get that it might be just kind of slow pace, right? A lot of us are always looking at these charts, but this is it. This is so meaningful to what I've just spent over 5 years of my life, especially as a crypto content creator in the crypto space. This is so meaningful. Everything that's happening right now. The Supreme Court could stop the SEC's war on crypto. Neil Gorsuch, Brett Kavanaugh, and Amy Coney Barrett are among a group on the Supreme Court who may not smile upon the SEC's interpretation of the law. I'm going to put a link in the description of this article. It's such a good article. Coinbase stands at the vanguard in the modern battlefield of cryptocurrency as it stares down a lawsuit brought by the SEC. Pretty much all of you are aware of that lawsuit. In June, the company delivered a declaration in response to the lawsuit that leans on the major questions doctrine. This essential legal principle, if you're unaware, holds agencies like the SEC accountable when they circumvent Congress' role in our constitutional structure and manipulate vague and antiquated statutes for their own ends. Hence exactly what's happening. Hence what they're doing. Hence how they're destroying crypto holders' portfolios even. In a recent landmark case that curbed executive overreach in both the Obama and Biden administrations, the Supreme Court has underscored the importance of the major questions doctrine. The doctrine underlines a crucial point that when agencies attempt to regulate questions of significant national or political importance, they must have explicit authorization from Congress. Does SEC have explicit confirmation, authorization from Congress? Nope. The Supreme Court's decision striking down Biden's student loan forgiveness program is the most recent invocation of the major questions doctrine. And there's Paul's tweet that we went over yesterday. The SEC stubbornly insists that developers must comply with laws that without nuanced adaptation are impossible to adhere to. This grudging approach of just come in and register while blatantly ignoring the numerous questions raised in Coinbase 2022 request for rulemaking is exactly why the major questions doctrine is so relevant to the SEC's approach to crypto regulation. And then it goes into the Constitution. The framers of the Constitution left us an arsenal of tools to wage a revolution for freedom within the design of the U.S. Constitution. Crypto defendants such as Coinbase, Ripple, and Binance are pioneering a revolution of their own. I said in yesterday's video when we were covering Paul Graywall's tweet, this is going to come down to the law. And I really, truly think the disadvantage that the SEC has is they're on the wrong side of the law. And when we look at if this law is presented, or if this question of law is presented to the Supreme Court, and these three that are in this article, they're on my thumbnail of this video, but if this is presented to the Supreme Court that is seemingly on the side of freedom, is seemingly on the side of, you know, how the Constitution was framed, it's not good for the SEC in their fight against crypto. It's not good for the SEC in their fight against Coinbase and what they're trying to accomplish there, namely and especially going around Congress. So this is such a big deal. Again, this article really brings it all together really well. And I think this is something we're going to hear more and more about. It's not the first time we've been hearing about the major questions doctrine, but this is going to be a developing theme. And this really could be the thing that really kind of delivers a potential win of forward momentum for the crypto space, for Coinbase, for Binance, for Ripple. And that's just something we'll have to sit back and wait and see. But I wanted to share this with you, kind of bring it all together. You know, a lot going on. All while that's happening, nothing really happening with price. So this is Bitcoin charts. You can see on the 6 hour, just hanging out in consolidation, which is fine, which is normal. But wanted to cover this news, a couple topics. Let me know your thoughts, everybody. Please hit the subscribe if you're not a subscriber. Hit the like button. I'll see you in the next video. God bless.